Let's bring in Thomas Hayes now, Chairman and Managing Member at Great Hill Capital. Well, Thomas, much to talk about this morning, but I want to start with NVIDIA. What's triggered its latest stock surge that really helped it vault past Microsoft and Apple to become the world's most valuable company? How much of it had to do with that 10-for-1 stock split?
I think that has a lot to do with it, Liz. Thanks for having me on. You know, there's a saying, an old saying, when everyone's thinking the same thing, someone is not thinking. Certainly the opportunity and the prospects for NVIDIA are phenomenal, but they are predicated on the company maintaining 70% gross margins. They are predicated on the idea that the company is going to grow at a long-term growth rate of 45% per year compounded, and thereby the 45 or 50 times earnings multiple is justified. And we think that this might be a little bit overdone in the short term, and a lot of this last-minute demand is attributable to the retail investors coming in at lower prices, despite the fact the value is the same. So we would be inclined to be fading this short-term strength. Long-term, great company, great execution, but I think there's going to be more competition. And you do have some government inquiries as to their kind of ecosystem and their dominance in the field. So I wouldn't count on them maintaining those type of margins forever.
Yeah, as you talked about, NVIDIA's growing sway over broader stock indices. That's kind of stoked concerns about the long-term sustainability of this market rally that we're seeing. NVIDIA and a handful of those other big tech names are responsible for driving the S&P 500 to multiple fresh highs this year alone. I think 31 records this year for the S&P 500. How concerned are you about the top heaviness of the market? What are the risks with that? Do you expect a reversal?
Yeah, I do think there is now, the last month especially, it's been pronounced. And I think that what you need to see in order for the rest of the stocks to really catch up, have some outperformance, whether it's small caps, whether it's cyclicals, whether it's any company that has any type of leverage on its balance sheet has been trading like death. And it's simply not the case. So what needs to happen next? We need to see the Fed actually do one cut or two cuts. And I think what you're going to see once that happens, Liz, is that the outperformers like the NVIDIAs, like the Microsofts, will slow down. That doesn't mean they have to crash or anything like that at all. Underperform the second half of the year, while those laggards from the first half, because of the hawkish talk and the hawkish actions, will start to dramatically outperform. And the credit markets will open for companies to refinance, and we're going to see a rally under the surface for those companies. So like you said, with retail sales coming in a little bit weaker, we saw CPI and PPI come in weaker. I think the stage is set. Unemployment over 4%, the household survey negative 408,000, a lot of downward revisions. We're slowing enough to justify the Fed doing that cut, which is going to broaden out the rally. As a matter of fact, today alone, Liz, Fed funds futures 69% chance of a cut in September, 95% chance of a cut by December, and a 68% chance of two cuts before the end of the year.
Yeah, and that's definitely going to give the markets more momentum. On top of that, the tech frenzy, it doesn't look like it's going to slow down anytime soon. How should investors navigate these stocks?
Yeah, I would be inclined to slow down on exposure to the concentrated tech that have led the first half of the year. I do think they're going to be more underperforming. And I do think once we get that signal from the Fed and the data that continues to confirm that they have to move before the end of the year, the opportunity is going to be in those cyclicals, in those industrials, in some of the interest rate sensitive groups like small caps, like selected REITs. That have really been left for dead. And I think what you'll see is a more flat performance from the stocks that have been the hot runners in the first half, like the NVIDIAs, like the Microsoft, and a more outsized performance from those that have really lagged and gotten hurt in the last 4 weeks.
All right, Thomas, really good to have you on again. Thomas Hayes, Chairman and Managing Member at Great Hill Capital.